Good afternoon, everyone. JK here. Today is Monday, February 15th, and on today's episode of Jaguar Consumer, I'm going to be taking a look at UTZ Brands, ticker UTZ. Now, the first time I covered this name was briefly. It was on November 17th in Conversations. So, to give just a quick recap overview of the company, Utz is a leading U.S. branded snack food company that offers a portfolio of salty snacks, including potato chips, pretzels, cheese snacks, veggie snacks. Its brands include Utz, Zaps, Golden Flakes, Good Health, Boulder Canyon. Utz went public on August 31st through a SPAC, specifically Collier Creek Holdings. So during the last decade, this company has done 13 acquisitions, added 10 new manufacturing facilities, and has grown its SKU count by 50%. But the focal point of this conversation, of this episode, is on M&A. As Oppenheimer has recently stated, the company has specific criteria for doing acquisitions. These acquisitions are meant to focus on helping with geographic expansion, expanding the company's presence in key product subcategories, enhancing long-term growth rate, as well as delivering strong synergies. Now, the two most recent acquisitions that the company has made is what I'll be discussing today. So let's begin with On the Border. It was back on November 12th that the company agreed to acquire Truco Enterprises. They are a leading seller of tortilla chips, salsa, queso under the On the Border brand from Insignia Capital Group for $480 million. D.A. Davidson was out about a week after the acquisition, highlighting a couple of noteworthy takeaways from that deal. Number one, OTB On the Border plugs a hole in Utz's salty snacks portfolio, which among others carries scale benefits. So prior to 2020, Utz growth lagged the salty snacks category, albeit modestly, due in part to what they call SKU rationalization, as the company was digesting other acquisitions that it had made in recent years. But also because of the lack of exposure to two faster growing subcategories. Those would be tortilla chips and ready to eat popcorn. So, with the acquisition of On the Border, it added the third largest brand in tortilla chips. So now Utz has a presence within the $6.2 billion segment, which is growing at a 5% CAGR. And they note that OTB has already grown in excess of that, more specifically 6%. The second point that D.A. Davidson makes is that this is going to sort of layer On the Border onto Utz's existing route structure, which is going to be highly accretive, as only 14% of On the Border brand sales come from Utz's core geographies. And this invites increased DSD productivity, or direct store delivery. So, to illustrate, management pointed out that states like Maryland, New York, Pennsylvania, each of which represent $100 million of retail sales for Utz today, only comprise 2% of On the Border sales. So, as such, the company believes it can grow On the Border, this year, next year, despite any sort of, difficult COVID-driven comps. Now, the company has no plans to change On the Border's existing infrastructure, which consists of 50 employees, outsourced manufacturing, and direct-to-warehouse distribution. Ultimately, this has yielded EBITDA margins north of 20% for On the Border versus just 12.3% for Utz. And the final point that D.A. Davidson makes is that with regard to future M&A, they note that a company like Pepsi, so Pepsi, Frito-Lay, they're largely handcuffed on salty snacks M&A given its size. while other scale players are diversified food companies, while Utz is your only pure play. Um, so I talked about the tortilla chips subcategory. The other subcategory was ready to eat popcorn, and that stands as the next gap that Utz plans to fill. And based on commentary, it seems like management has this strong pipeline of assets that they are looking at. So they're probably doing their due diligence and really just focused on which one is going to help us in the long run. Now, this leads me to the next acquisition. On January 11th, the company entered into an agreement with Snack King Corp to acquire certain assets related to the Vitner's brand, a leading brand of snack foods in the Chicago metropolitan market, for a total purchase price of just $25 million. Vitner's was established in 1926, has roughly 90 employees, and its portfolio includes potato chips, which makes up 41% of the portfolio, cheese snacks, 33% of the portfolio, pork rinds, 14%, and you do finally get popcorn at 7%. But even with the 7%, very small number, and like I said, the purchase price was only $25 million. So if we go back to the prior comment about how management said there's this strong pipeline of assets that they're looking at, I wouldn't be surprised to see them make another acquisition, dedicated to this subcategory down the road. But anyway, back to the acquisition. Um, Vitner's, that acquisition closed on February 8th. And what this is going to do, Vitner's is going to help Utz move from the number 7 position to the number 4 position among salty snacks in the Chicago market, which is also the 4th largest salty snack market in the US at approximately $688 million in annual retail sales, according to IRI. Most of Vitner's products are currently manufactured by Snack King, so Utz is going to transition the manufacturing of most of these products to its own manufacturing plants in the near term. Most recently, Oppenheimer was out with a note last Wednesday saying that based on their work, they continue to see an attractive case for outperformance from here. They lift their price target to $29, which, of course, is about 15% upside potential from the current level. They believe the company remains uniquely positioned to deliver double-digit EBITDA growth in both full year 2021 and full year 2022 in a growth-starved CPG backdrop. CPG stands for consumer packaged goods. Especially with many of these other players about to lap difficult comps, which we've talked about immensely through other names in the past. They also added that this level of financial delivery, coupled with investors becoming more familiar with the company's prospects, should help to sustain a premium valuation. Now, the next catalyst for Utz will be its earnings report. Nothing has been set according to their investor relations page, but their Q3 numbers were released in early November, so I would expect the next report to come out in the next 2 to 3 weeks or so. But I'll be sure to let clients know of that event when it's about to happen. And the final potential catalyst that I'll just briefly highlight is this week, the CAGNY conference is going to be kicking off. CAGNY stands for Consumer Analyst Group of New York. This virtual conference will be kicking off starting tomorrow, and it's got your who's who of consumer staple packaged foods companies from General Mills, Church and Dwight, Mondelez, Kraft Heinz, Kellogg, J.M. Smucker, Procter and Gamble, Coca-Cola, Kimberly-Clark. The presentations tend to be at a higher level, typically providing a overview of the company's business, an update on any recent business trends, commentary on recent strategic actions, and then an outlook for 2021. Utz is not scheduled to present here, but you never know. Their name might come up in some of these presentations. So that's another item I'll be keeping an eye out for. So that is going to wrap it up today on this episode of Jaguar Consumer. Hope you all enjoyed it, and I will catch you on the next one.